Hey everyone, welcome back to another session for Nonfarm Payroll. November. Time really flies so quickly. All right, just a quick sound check and then we can get started. Hope everyone is having a great week. There's a lot of stuff happening this week, a lot of disappointment as well, but we should expect a little bit more movement today. Okay, so welcome back to news trading session number 1. This is Non-Farm Payroll. My name is Vira Injodo. Our next session would be on the 9th on Thursday next week, and then the CPI on the 14th. But we'll talk more about that later on. All right, just as per usual, before we start, just a quick disclaimer. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to higher trading risks and delays in order execution. Be attentive when determining the volume of your transactions and consider all possible risk factors. All right. So as per usual, I'm going to get you the code to W deposit bonus, and then you should have access to the private Telegram channel if you register through the website and via email. You should be receiving that on your email. All right, so a little bit about myself before we get started. I've been a full-time trader with over 20 years of experience, and I've been a professional trading coach and technical analyst since 2007. My expertise is in the Ichimoku Kinko Hyo technique, which is a technical analysis tools from Japan. Director is Zanifix, an independent market consulting company, and I've been a guest speaker at the Trading Investing Expo in Sydney, in Australia, pretty much, Invest Fair in Singapore, and the ATA as well as the APTA conferences. If you don't know what that is, it's the Australian Technical Analysts Association as well as the Australian Professional Technical Analysts. Okay? All right. So we're going to do a quick rundown. I might do things a little bit differently because I'm actually having a little bit of an issue with my MetaTrader installation. So I'm actually going to be using the web platform. So it's actually going to be a lot slower, but it's probably a good introduction that there is actually a web platform as well. All right, so we're going to run down a few stuff. We're going to talk about what's the BLS and then what's the NFE, what's the unemployment rate. And then the other thing that we're going to be taking a look at is also the US average hourly earnings. And then we'll go through the economic calendars as well as chart history, how to use those calendars, as well as some NFP trading strategies, and then we'll do all live trade in half an hour. All right, so you can use this code to double your deposit bonus as Nonfarm 2023. All right, the code again is Nonfarm 2023. This is still valid for the rest of 2023. This is to double your deposit bonus when you are depositing into your Octa trading account. All right, cool. Let's go through stuff very quickly and then we can take a look at the market. So what is the Bureau of Labor Statistics? The BLS, or the Bureau of Labor Statistics, is a federal agency that collects and disseminates various data about the U.S. economy and as well as the labor market. It also, in its reports, it also includes the CPI numbers as well as the PPI numbers, both of which are considered important measures of inflation. We are going to be doing a live CPI trade on the 14th of this month, so just mark that on your calendar. Now, within the labor market, the most interesting data are going to be the number of people employed outside of the agriculture. This is what we're going to be watching out for tonight. It's a non-farm payroll as well as the unemployment rate. At the beginning of every year, the agency basically publishes a calendar with a release date for the entire year, so you cannot miss this. It's already pre-scheduled at the beginning of the year, so you know every single time when those releases are going to be. But non-farm payroll or unemployment data as well as the non-farm payroll is pretty much published every first Friday of the month, but if it falls on a holiday, publication is usually postponed to the following week and occasionally to the Thursday of that week. Typically, we don't see this very often. We typically see this in the month of March. We might have a little bit of a delay in the month of March, but you know, even if it falls on Good Friday, we typically see the release of the NFP anyway, even though it's a public holiday in the US. All right. Inflation data, CPI, PPI, typically published on the following Wednesday after the labor market data is released. Sometimes it's 2 weeks, and in our case for this month, it's going to be on the 14th. It's not going to be next week. It's actually the week after. Okay. All right, let's talk about the NFP numbers. If you have any questions, feel free to type it in. But I think for tonight, typically we just do the live trade and we'll talk about the questions later on. All right. Nonfarm Payroll, the NFP report, is a monthly release by the US Bureau of Labor Statistics, or BLS, that measures the number of jobs added or lost in the US economy, excluding farm-related jobs, private household employment, and non-profit organizations. All right, so market analysts and investors usually look for NFP figures above 200,000, as it's seen as a positive sign of a healthy job market and a growing economy. However, the interpretation of the NFP data can vary depending on different economic factors and context it is released in. We'll talk more about that after we go through some of the theories here. But this month we are actually going to be looking at a number at about 186,000, but we'll talk more about that because we do have a little bit of a surprise last month during the NFP release. If you guys were here last month, you guys should see what happened there. We got nearly doubled than what the market consensus is. All right. NFP data is a crucial indicator of the state of the US labor market and can significantly impact financial markets. A figure that falls below the market expectation may be viewed negatively, while one that exceeds expectation may be viewed positively. Again, I'll talk more about this later on because it's not as simple as looking at what market consensus is and say the number comes out below it or above it, because we have previous revisions that we need to take into consideration as well. And during news releases, we typically get something that's revised as well. All right, but regardless, the NFP figures are closely watched by traders and investors, particularly in the forex market, where currency pairs like the Euro USD dollar yen, Pound USD dollar Canadian Aussie USD tend to exhibit high volatility in response to the report release itself. Okay, so it's not going to impact the currency crosses. It will typically impact anything that has to do with the US dollar directly. Some assets like gold gets impacted by that as well. Oil probably not as much in terms of volatility compared to gold. Okay, all right, so the release date is a special time for many traders who have learned to successfully use special non-farm strategies, which is something that we're going to talk about with the order types. As after the release, there are typically strong changes in quotations and even trend reversals, and algorithms of technical analysis simply stop working for a few minutes, right? Because during news releases, we typically get a little bit of a whipsaw, and then market kind of stabilizes itself. And that's when we can try to fade it with a little bit of a technical analysis, okay? Now, according to the BLS, the NFP classifications account for approximately 80% of the US business sectors, contributing to the GDP numbers. So if we saw that quarterly GDP that goes up last week, no, it was last week? Yeah, it was last week, where we have the GDP in the US goes up to 4.9%. Major contributors to that GDP is actually, if we see an improvement in the NFP numbers, we typically see that number as well. So with the GDP at 4.9% last quarter, we might actually have a little bit of a higher expectation for today's NFP numbers. Okay. All right. So I'm gonna spit things up a little bit. This is recorded. I think there was a question asking if this is, can I get the recording? This is recorded. So if you're missing, if I go too fast on the theories, you might want to recap it again. But I need to go a little bit quicker today because I need to spend more time in setting up orders for tonight. Okay. So the unemployment rate is the other number that we are looking at. We're not looking at just the NFP numbers, but we're also looking at the unemployment rate. And typically, if we have a high NFP numbers, we want the unemployment rate to go down. That's where we know both of them are going to be positive for the US number. If we have a high gain in NFP, but we also have an increase in the unemployment rate, it's kind of a mixed data. So the way we read these two numbers is actually going to be the opposite of one another. Okay. So the unemployment rate is calculated in percentage and it's published at the same time as the NFP report. Unemployment rate represents a proportion of the labor force that is currently not employed, but it's capable of being employed. The US unemployment rate is determined through a survey of approximately 60,000 households. I know it's not like in scale in terms of the survey number, but with the unemployment rate, the NFP numbers. In terms of the household surveys, typically it's only about 60,000 households that's being surveyed, as kind of a representation of the whole U.S. Labor market. So according to the U.S. Bureau of Labor Statistics, for an individual to be classified as unemployed, they must meet the following criteria. They must be without a job, obvious, right? They must have actively looked for a job in the past 4 weeks. Okay, they must also be available to start a job if offered one. So technically speaking, by the way we look at this is that from the weekly unemployment claims, that is basically where the BLS gets the number to get the survey for the household that's going to be part of the unemployment rate, right? Because for them to be counted into the unemployment rate, to meet that criteria 1, 2, 3, they basically kind of need to claim their unemployment benefits. Okay. Because if a person doesn't meet this criteria, they're not considered unemployed for the purpose of calculating the unemployment rate. Okay, just give me 1 second. Okay, so the next set of data, there's actually a third data, that is the US average hourly earnings. At this point in time, it's probably not as crucial compared to last year. I think it carries a little bit more weight last year than what it is right now. But if the changes are huge, right? If it's drastic enough, then this could actually be the third number that could actually move the market. Now, the US average hourly earnings data is a report released monthly by the BLS as well, alongside the unemployment rate as well as the NFP numbers. This measures the average hourly earnings of workers in the US economy. Data is collected through surveys of businesses across various industries and encompasses both full-time and part-time employees, including overtime earnings. Economists and investors and traders closely monitor this report, as it can offer valuable insights into the state of the U.S. economy and its potential impact on inflation. Now, there are actually several division into reading out the average hourly earnings, right? And also with the job numbers. We actually typically look at the race as well. The highest rate that contributes to this is African American and Hispanic, and then they're going to be the third one is actually going to be the Asian numbers. So yeah, it sounds a little bit racist, but in terms of how we look at the data, we actually do look at the races as well in terms of how they contribute to the employment numbers, just to give you a little bit of an insight as well. And the average hourly earnings plays a lot in this sector as well. Okay. So when trading based on the U.S. average hourly earnings data, traders often scrutinize the changes in a wage growth rate compared to the previous months, as it can signal shifts in the labor market and potential inflationary pressures as well. Okay. Higher than expected wage growth rate may indicate potential inflationary pressures, which can result in higher interest rates and currency appreciation. Conversely, a lower than expected wage growth may indicate weaker inflationary pressures, which may lead to lower interest rates and currency depreciation. As with any economic report, it's important to consider broader economic context and the other indicators when trading based on this set of data. Okay. So let's take a look at the strategies first, and then we'll go through some of the examples as well as talk about the revisions. But there are three main strategies traders use to trade the news. Strategy based on two pending order settings. This is called straddle. We're basically going to be doing that. You could also trade before the data is released, and you can also trade it after the data is released. But you got to figure out which one you want to go with, okay? Because there are pros and cons to whether or not you should be trading it before and after. We'll talk more about that after we closer to the end of the session. We'll talk more about the pros and cons. But today we are going to be doing a run through on how you actually trade during the release, okay? So you got a couple of strategies. Obviously, number one is pre-NFP trading. Potential strategies to trade markets anticipation of the NFP data release. Basically, opening a position in days leading up to the NFP release with the expectation that the market will begin pricing in the anticipated outcome. You actually need to close your positions before the actual NFP release to avoid extreme volatility that can follow with it. So if you have a running positions, it's actually much better to actually close out of that position. If it's ideal for your conditions, but typically a lot of traders kind of close out of their positions before the NFP release, and then they'll switch to a different set of strategies, which is the straddle strategy, which is something that we're actually going to be doing today, which is placing two pending orders. We are going to be using a buy stop and a sell stop above and below the current market price just before the NFP release. That way you can potentially profit from a strong price movement in either direction. But once one of the orders is triggered, you need to immediately cancel the other order to avoid being exposed to further market fluctuations. So this is going to be a jump in, jump out kind of trades. That's basically the straddle strategy. Okay. All right. Let me grab a quick ring. All right. The next one is actually the fade. We want to fade the initial move with the NFP numbers, because with NFP numbers, what we see, what I saw, and I've been doing more than 200 NFPs in my trading career, we typically see the market goes in one direction, right? And then once everything settles down, it typically reverses on that initial reaction. So that's what the fade is, right? Because it involves waiting for the NFP release and then observing the initial market reaction. So we are letting it run. But in this case for tonight, we're actually going to trade it. But once we close the position, once the initial volatility subsides, we want to look for opportunity to actually trade against that initial move during the release, okay? This approach is based on the idea that the market often overreacts to the NFP data and that a retracement or a reversal is likely to follow just to balance things out. Remember what I said earlier when I said, for a brief moment, a lot of your technical analysis kind of stopped working, right? Because this is such a unique event where we actually see a huge spike in volatility. Market kind of just goes out of that certain range. Typically, once everything settles down, it will actually come back to the initial pricing before the news is released. And that's when a lot of traders will start looking at it and start analyzing it. What happened during the NFP release? They'll start processing their fundamental data. Then they'll start looking at, does the initial movement, is it out of norm, or is it a normal reaction to the outcome? A lot of considerations as well. So that's where the logic with the fade, right? And then there's going to be the post NFP trading. So instead of trading during the release, you want to wait for the market to digest the NFP data, look for trading opportunities in the hours or days following the release. So you might open a position 2 hours after the NFP release, or you might actually wait until Monday and see how the Asian market reacts to the NFP release, and then you start opening out your positions. But this is more for swing traders, right? It's probably not for intraday traders. Okay, but this strategy allows you to avoid heightened volatility during the release and focus on longer term trends that may emerge as a result of the NFP data. Pros and cons on this one here, because during these releases, we typically get a wider spread. This is because liquidity kind of drops and the volatility does go up as well. And in terms of where liquidity kind of dries up a little bit, sometimes you might not get your entry exactly at where you want it as well, considering the spreads. And, not a lot of people are actually opening up positions during the trade. So be very careful as well, right? So regardless of the strategies you choose, you got to keep the following tips in mind. You got to manage your risk. Always use appropriate stop loss orders. Never risk more than a small percentage of your trading capital on a single trade. Stay informed. Keep track of economic news, forecasts, market sentiments leading up to the NFP release to make better informed trading decisions. Be prepared to adapt your strategy based on the actual NFP data and the market's reaction to it. So if you have a buy order, for example, and then the data kind of disappoints, it doesn't go according to your way, you kind of need to adapt, and you have to make that decision where you should close out your position and kind of reverse that position. Okay. All right. So I actually don't have a lot of time, but I'll show it to you right now. But when we see the initial release, You can see what happened here during the NFP numbers. That red line is where the NFP is released. You can see the market goes in one direction and it comes back within the range itself, and that's basically what the NFP does. It does happen a lot, right? So every time it breaks out, we actually have the market kind of pulling back to the range as well. Okay, so that's where the fade comes in. So when we trade the release today, ideally, if we can get out within the first 5 minutes, we want to get out within the first 5 minutes. It's actually going to be quick. We need to manage our trade wells, and then we need to get out as quickly as we can. And if you're thinking, but I should be holding on to that position and stuff like that, just as a reminder, typically what happened is historically, market does kind of revert back to the range, right? You see that 2 horizontal line? That's the range before the NFP release. Once it breaks out, it kind of comes back to that range again. This is in April. But you can see that it typically happens every month, right? Maybe I would say maybe out of 12 NFPs, you're going to get 10 times where it kind of acts like this, right? It kind of just breaks out of a range, but after everything settles down, it kind of fades back into the initial range. And that's something that we want to keep an eye out for. All right, so let's take a look at the calendar tonight. Let's take a look at the number first. And we want to focus on the NFP numbers, and let me just get this one here. Okay, so this is the focus. All right, you can look at the previous month is 336,000. The market is currently expecting between 180 to 190,000. So if it comes in at 200,000, it will be above market consensus, and a lot of traders are going to look at that and say, yeah, you know what, it's still pretty strong NFP numbers. Okay, the other one is the unemployment rate. We're not expecting the unemployment rate to change at this point in time. It's expected to remain at 3.8%. Okay, so let me give you a little bit of stats on last month. We actually have that jump where the consensus was 227. Sorry. Consensus was 170,000. Last month we got 336,000. Okay. Previously it was revised up from 187 to 227,000. So we are actually going to be looking at a little bit of a revision coming in. And for revisions, I like using Forex Factory because it will actually give you that revision. I'll show it to you later if we get a revision, but within 7 minutes we should be able to get that. Okay. So let's go through our orders first. I've got 2 orders placed for the Euro USD. This one here, I've got a buy stop at 1.0667. You can adjust it to 1.0670 if you want to, right? So I can adjust this to 1.0670 just to give it a little bit more room. So what I want to do is I want to have a buy stop 1.0670. Okay, so 1.0670, and I want to create a buy stop order, and to the downside I have the sell stop at 1.0611. remember, if it hits or any of this gets triggered, we want to get out of, we want to cancel the other trade. All right, and the reason why we're looking at this is we're basically looking at the range that's capped on whatever we looked at on the Euro USD. This one here, we can see the Euro USD has a high at around 1.0667, and that's basically where we want to place our orders. We want to create an order outside of the current range that's currently that's currently formed before the NFP numbers. Okay, next up is the pound USD. This one is actually going to be a little bit tough, and the reason being is because if we take the low for the pound USD, we can pick a low there, right? It's about 1.2185, but for the top, this one here is a little bit higher. So this is actually going to be hard to create a buy stop order for the pound USD. So for now, I need to kind of place it at a psychological level. So let's create the order. So I'm gonna go to new order, and I'm gonna go with a buy stop. So if it hits that level, I want it to buy, right? And I want it to go a little bit higher. I need this to be at 1.2250. Okay, 1.2250. And I want to place my order a little bit higher than where it is right now. I don't want to place it so close to where we are. And in terms of the sell stop, so I can go here and select sell stop. All right. And I'll change this to 0.1. Okay. And I want this to be below 1.2180. Okay. Right, so I'm gonna place it a little bit out of range. So we've got 4 orders. We've got Euro USD, buy, sell, and then the Pound USD. The Euro USD again is at 1.0670 for a buy stop, 1.061 for a sell stop. The Pound USD buy stop at 1.2250, sell stop at 1.2180, and feel free to request, but I'll just jump in onto gold now very quickly because can we see a little bit of a range for gold? Yes, we actually do have a little bit of a range, and let me bring that range to you. I want to actually have it a little bit higher. That's going to be at 1992. In terms of the low here, I'll probably take this range here because there's no point having it a little bit lower than 1980. All right, so I'm going to place 2 orders for gold. I want to buy stop, right? I can drag it as well if I want to, right? I'll just have it a little bit at about 1993, 1993. Happy with that. And I'm going to place the order at about 1993. And then I'll need to create another order, which is the sell stop order. And I want to have it not too far away, probably about 1978.50, right around there. Okay. Okay. So we've got Euro USD, we've got Pound USD, we've got the dollar Japanese yen. You could trade the dollar Japanese yen. This one here is also within a certain range, so it's probably not too hard for this one to look at. We can do a buy stop, maybe a little bit lower. I probably want to have my buy stop a little bit lower, maybe about 150.55. Okay, 155. Okay, 150.55. That's where my buy order is actually going to be. My sell order would actually be just below this low here. It's about 149.80. 149.80. Okay, 149.80. And that's where my sell stop is actually going to be. All right. Yeah, because you can place a stop loss now if you want to. It's just that I don't have that luxury right now because we'll adjust our stop loss later on. But look, the way we look at it is this: if we have one side that got triggered, so for example on this one here we got, let's say 149.80, we got a sell triggered, then your stop loss will be at 150.55. Your stop loss will be at the other range as well. So you just kind of have to do it very quickly as well. You can do it now if you want to. So for this trade, for example, I can modify it. All right, I can have my stop loss and take profit adjusted. So if this one runs to the upside, I want to have my stop loss at the sell stop, which is over there. And I'll go for a 1-to-1 risk reward ratio. So I'll just modify it. Maybe I'll just take it at 150, 150. Okay. And that's how we do it. You can place your stop loss if you want to. If you have the time for it, by all means, go for it. Right. It's just that I don't have that during the session because I need to go through a lot of stuff and data is going to get released in 2 minutes time. Okay. All right, so we got Euro USD, we got Pound USD, we got gold, we got dollar Japanese yen. Aussie USD is up to you if you want to trade the Aussie USD, but the Aussie USD, if you want to trade it, you can do a buy stop as well, just a little bit higher than 0.6460. Just give it a little bit more room, okay? Happy with this level, can have it there. I'll place the order. All right, sell stop as well. Okay, my sell stop, I just want it to be below this range here, maybe below 64.10, all right? Just about there. Okay, 0.10, yep. Okay, so we got that orders. and we need to monitor this because if any of them get triggered, we want to close out the other one. Okay, so let's say if the buy stop gets triggered, we want to cancel the sell stop. Okay, so you need to be quick in terms of managing it, otherwise you're gonna get whipsawed. Okay, cool, clear, great, good. You can do it. You can place your stop loss and you can do your take profit as well. But just for now, we're actually going to be doing this a little bit quicker. Okay, so let's for it. Numbers should be coming out now. All right, buy trigger for pound USD, Aussie USD, and Euro USD got triggered. So I'm actually going to close the Euro USD. Yep. Okay. Yeah, okay, cool. Let's close out the sell stop. Buy sell stop for pound USD and sell stop for Aussie USD because we got that running, and then gold got triggered. Sell stop, we need to close it out. Everything is a buy stop that's got triggered. So I'm expecting the number to be a little bit of a disappointment, I guess, but let's see. So we're running in profit, and let's take a look at the number. All right. NFE is really bad, 150,000. We didn't have any revision from the previous month. The unemployment rate also went up to 3.9%. This is actually pretty bad. Average hourly earnings also went down to 0.2%. So yeah, it's not pretty for the US. We got, see that? This just changed from 336,000. We have a revision, a downward revision to 297,000 from 336,000. So let me see if I can zoom in a little bit here. But yeah, see that? There's a little bit of a revision going on. Okay, so this is pretty much straightforward. Dollar Japanese sell got triggered, so I need to close out the buy stop. Okay. Yeah, it's all running right now. And, just take it, whatever it is. This is a mini lot. You can see here, we've got $75, $80. That's basically 70, 80 pips already. We got 90, 92, 93. So it's pretty bad. I think it should go in one direction for a little bit and might kind of just wane off a little bit as well. But yeah, so we didn't get a whipsaw, which is good because the worst thing that can happen is that it takes out both the buy order and the sell order. So for now, we are still pretty good. So yeah, let's talk about the numbers, or if you have any other requests. It's so freaking bad for the US. It is actually pretty bad. 150. It's actually pretty bad. Last month's number was revised down below 300,000, which is also bad. Average hourly earning was down 0.2%. Yeah, unemployment also went up to 3.9%. It's not a good number for the US. So this one here should be a little bit straightforward. Thank God. We didn't have that whipsaw, which is good, right? Because the worst thing that can happen is that it triggers both of the orders. It's so hard to manage that. All right, so right now we have 5 trades running. We've got the pound USD, Aussie USD, Euro USD, gold. I might actually close out on gold a little bit. Just waiting for this one to hit about maybe 70, and I'll close out on gold. Yep. So I'm out from gold. Currencies, it's pretty flat at this point in time. I do have a little bit of a resistance building up on Euro USD at 1.07. So maybe we can adjust take profit to... for the pound USD, maybe about 1.23, yeah. Okay, and for the Euro USD, I actually want to aim for 1.07. I'm not aiming anything more than 1.07 at this point in time, so we'll see what happens here. Next goes to Aussie USD. I need a stop loss, a target level for the Aussie USD. Aussie USD probably going to be taking profit at about 65 and nothing more at this point in time. Dollar yen, I'm actually not too keen on shorting the dollar Japanese yen, but it is what it is. The market is trading the dollar Japanese yen a little bit lower. Dollar Japanese yen for this one here, I would actually go for 149.50. I think the market nearly approaches 149.50. Not aiming too much on the dollar Japanese yen because there's still going to be a little bit more demand for the dollar Japanese yen. All right, gold, I'm already out for gold, but this one here, the reason why I got out from gold is because it's going to hit that 2,000 mark level. When it hits 2,000, it gets a little bit tough. Okay, so yeah, we might expect a little bit of a pullback because if we take a look at the movement on the 15-minute time frame, we're still early. Not even 5 minutes. I already got out from gold, which is good. For everything else, if you're worried about, the positioning on this one here, you can actually move your stop loss to break even if you want to, or you can actually have it at the initial level. But if you don't want any risks on this one, you can move your stop loss to break even. So we got in for pound USD at 1.2262, so you can actually adjust it to 1.2262 if you want to. Maybe I'll give it a little bit more room, right? 1.2250. Yeah, just slightly below where we got in. I think that's completely fine. Just in case it kind of revert back as a fade, you might want to start moving on your stop loss here. So yeah, start adjusting your stop loss. You can place your stop loss right now if you want to. I'm going to adjust it a little bit higher for the Aussie USD. The Aussie USD, I'm not really too keen. So we got filled in a little bit too high on the Aussie USD as well, right? Yeah, I'll give it a little bit more room, maybe about 25 pips as a stop loss. I think it's all right. The risk reward ratio is still more than 1-to-1, so I'm happy with that. Okay, next up is the Euro USD. Definitely need a stop loss for the Euro USD because this is the one that I'm actually worried that is actually going to revert back. So I'm actually going to place it about 1.0650 on the Euro USD. So we're looking at about 26, 26. Yeah, it's not 1-to-1, but it is what it is. So I'll just take that. And much better than trading it without a stop loss. All right, the Dow Japanese yen. This one here, I would place my stop loss slightly above 150.50. So we actually don't have a lot of room because our sell order got triggered a little bit too low on the Dow Japanese yen. So this one is actually a pretty high risk trade. So I'm not liking the Dow Japanese yen. But yeah, it is what it is. Because I'm a little bit worried on this one. I might adjust the take profit target a little bit lower, maybe at 149.50. But I'm not really too keen on shorting the Dow Japanese yen, I'll be honest with you. I'll have this slightly above 150. I'll just modify that. All right. So good. We got that sorted out. Markets should be going in the right direction at this point in time. So we got this sorted out, right? You guys want to start moving your stop losses, or if you're happy with what it is, it's only about 27 pips in terms of gains. But if you do want to get out, if you think 20 pips is all right, I think it's all right. For an NFP number, it's all right because we open up a lot of positions. So on average, we're still looking at about 100 pips gains, $20 here and there. Something got closed out. I think Aussie USD. What was it? Aussie USD. Now we got gold, and the Euro USD got closed out at 1.07. So yeah, Euro USD was the one that got closed out at 1.07. I'm very happy with that. Euro USD hits our profit target at 1.07, and that automatically got closed out. The one I'm not too keen is actually the Dow Japanese yen. So I might actually want to close out on the Dow Japanese yen, and I'll actually get rid of everything else as well. Yeah, I'm actually just going to close out everything. All right, so not too bad. It is about $200, I believe, $150. About, yeah, considering it's a dollar a pip on this one here, it's a mini lot. So we just went through close to about 100 pips, including gold. Obviously, that's going to be the biggest mover. But yeah, we're done for the NFP trades. So we can take a look at any requests if you have in terms of analysis. I'll be more than happy to start looking at that. But we're not quite done yet because we still have some time. And what we are waiting for right now is a potential fate that could happen with the market. And here's the reason why I'm actually, if you guys been following the outlook from Monday, you should know what my view is on the Euro USD, right? We're still in this channel here. And the reason why I want to get out at 1.07, sure, can it go above 1.07? I think it could, right? But I think there's a lot of potential that people are just getting out at 1.07. Now, 1.07 is a key number for the Euro USD. A daily close above 1.07 is actually going to be very significant because that's going to be outside of the green level that we have here. The reason why we have that green level is actually the support area for the month of May, a little bit of a transition in the month of September, and it has become a resistance basically throughout the month of October for the Euro USD. So that resistance range is actually between 1.0650 and 1.07, and that's the reason why I want to get out at 1.07 for the Euro USD. Now, can we look at this as a potential fade on the Euro USD? And obviously there are a few arguments to this, but we can measure how far this could potentially go. We actually do have a little bit of an extension going on. The extension does lead up to about 1.0720. So we might actually wait for a little bit for the Euro USD. If it fails at 1.07, then we want to look for an opportunity to kind of reverse what the market just did, all right? Is it risky? To a certain degree, it's not. It's more like a pattern that we see every NFP release. Market goes in one direction and it kind of reverses back on itself. And we're starting to see a little bit of a shift there. If you go into a small time frame, this is on a 1 hour time frame, so you're not going to be looking at anything. But if you go into the 5 minute time frame, you're actually going to start looking at a little bit of a weakness building up on the Euro USD. So right now, at any given moment in the next 5 minutes, if we close below 1.07, we could actually potentially trade a Euro USD for a short. On what time frame did I place the trades? Time frame doesn't matter, but if you're looking for the range, we're typically looking at the 15 minutes range. If it's too small and the market is more of a range bound market condition, we typically go and take the range on the hourly time frame. But it's not a matter of time frame, because during news releases, whatever time frame you want to look at, it's irrelevant, because we're looking at price movement and the range is pretty much established. But the minimum range that you want to look at is the 15 minute time frame. Okay, so let me just bring up this one here. So just to give you a little bit of an example, the range that we took just now to open our trade was actually this. And this is on the hourly time frame, right? The reason why I'm okay with that on the hourly time frame, because this range is actually pretty small. It's only about 50 pips, so it's reasonable. And market was pretty much around there already, and we basically need to take the nearest high, which is over there. In terms of low, I can go for this one here, but you know, it doesn't matter. It goes in one direction anyway, so as I said, shouldn't be that much of a deal. But if you get your range wrong, that's gonna be problematic, right? If you take a look at a 5 minute range, for example, if you're trading this on a 5 minute time frame, you might actually get the range wrong. You could get this as a potential range, right? Because you're looking at a 5 minute time frame, and that's gonna be problematic because it's only about 8 pips in terms of distance. If the spread widens out, you could get triggered on both the buy and the sell. So be very careful with that. Middle line, I would probably go with a 15 minutes time frame to look for your breakout range. But you know, if we go by the 15 minutes time frame, we are looking at the same range on the hourly time frame. So sometimes it is the same range, sometimes it's not. Okay, so take a look at price movement on the Euro USD, and I'm very happy to be out of that trade because right now it's kind of struggling a little bit at 1.07. You can see the initial reaction, and then it kind of slowed down a little bit. Because if this one wants to rally up, if the Euro USD wants to rally up, and the data, considering the data was pretty bad, right? Unemployment was up, NFP number was down, below consensus, previous month was revised down, average hourly earnings was down as well from 0.3 to 0.2, so everything bad has happened, which should give one directional movement. But if the news was so bad, right, and the Euro USD needs to pull ahead, why didn't the Euro USD continue to shoot up to about 1.0750, right? We're looking at a little bit of a resistance building up, and there's a reason for that, because on the daily time frame, this is where we need to keep an eye out from. If it fails to close above 1.07 tonight, I don't think a lot of people are actually going to be holding on long to their Euro position. So yeah, people might actually be looking at this one here to get out on the Euro USD. Can this one go a little bit higher? As I said, we could go a little bit higher, approaching 127.2 and maybe 1.0725. You can also use the pivot level And the daily pivot for this one here is located at 1.0720. So we do have that as potential target level, but I was just a little bit more cautious. I'm going to get out 1.07 because I don't want the market to kind of fade in on what we just got. But if it didn't fade and you guys still in that position, good. Move your stop loss to break even if you want to hold on to your position. But always at a take profit level, right? Don't just randomly say, oh, I want this to be at 1.0750. Can it go there? Potentially, but there's a lot of resistance before it can get to 1.0750 because we got 127.2 at 1.07180 and then 1.072 where the resistance 2 on the daily pivot is located, and then we have 1.0725 as a key resistance. So this one here is potentially very close to a resistance at this point in time. Dollar index, will it break? Will it break? It's actually very interesting on this one here. Will it actually break 105? Still a little bit more to go for 105. I doubt we're actually going to be looking at the move towards 105 tonight. It might happen on Monday. Well, we'll see. Because 105 is not going to be a level that's going to be easy to break on the dollar index. So you got to be careful on this one here. All right, US 30 and Nasdaq. All right, sorry, I just saw that, so I'll be quick on that one here. Let's take a look at the US 30 and Nasdaq. From the FOMC, everything was supposed to be good. I think we should be looking at a little bit of a rise in US 30 and Nasdaq, so yeah, no problem at all. US 30 on the hourly time frame, still good. It's actually looking pretty well. It opens up above pivot. That pivot is at 33,650 for the US 30. I think we might actually push higher a little bit towards the end of the week. Maybe about 34,000. Above 34,000, I think that would be ideal. 34,200 could be a potential for this one here, which is at about R2 on the daily time frame. So I think we're still looking at a little bit more push higher on the US 30. And Nasdaq as well. I think for Nasdaq, this one here, we just got we just had a breakout to the upside. And if we go into a small time frame, you can actually see this very clearly. There's actually a little bit of a floor building up on the US on Nasdaq. So we just need to break through that 15,000 level. But once we're above that 15,000 level, I think we are actually potentially looking for a little bit more of a stronger push to the upside for Nasdaq. A lot of momentum to go, especially starting the US session right now. There's a lot of momentum on the early time frame. RSI is still good on this one here. I'm not looking at any divergences. Once we break through above that 15,000 level, I think this one here could rally up significantly. So if you're thinking of going long on this one here, just make sure your stop loss are going to be below the pivot, which is below 14,850. In terms of target level, I would say go for R3 at this point in time, which is about 15,250, because that's going to be the next psychological leg up on the Nasdaq. So what are we looking at? 200 points to the upside. I don't think it's actually going to be too hard for the equity market to pull that out. Oh, that's good, Dwayne. Got my account for 1 week, now double up my account in 1 week. I love hearing that stuff, Which US data besides NFP will you do news trading? I will do the CPI, which is the inflation data. And we're actually going to be doing a live one together, just like this. I like the CPI a lot more than the NFP, I'll be honest with you. I actually do, personally, I trade all CPIs. I don't trade all NFP numbers, but I'll trade all CPI numbers. But yeah. CPI, I like CPI. By the way, we're not done for tonight. Okay, we're not quite done for tonight. So anything can, market still reverse on the numbers tonight because we actually still have the ISM services PMI. If the number comes in below 50, that's going to be problematic for the US economy. It's typically not a very important number because the focus would be more on the manufacturing number. But the manufacturing number was pretty bad as well last week. Not last week, just 2 days ago. But today we still have the ISM services PMI number. That's going to get released in about an hour, 15 minutes time. So we're not quite done as of yet. Okay, cool. So yeah, which US data I like to trade apart from the NFP in terms of volatility? I like the CPI. Yeah, I'll trade the CPI for for the US data, right? US data. I'll trade the CPI. PCE is a little bit harder to trade. I'll trade the GDP, but I will only trade the quarterly GDP, and we just got that last week, so we're done with the GDP. I'm not too concerned about the monthly GDP numbers. So the US data is actually a little bit of a mixed bag. The one that you can actually kind of pinpoint itself statistically, it would be the NFP numbers and the CPI numbers. I do trade the FOMC meeting minutes. I do trade the FOMC announcements like yesterday, the one we got yesterday, last night. But it was a little bit more qualitative. So if you're not quite clear in terms of how the monetary policies works, in terms of how their statement is all the time, it takes a lot more work. It takes more time to get acquainted with how the FOMC works, right? But it does cause a lot of noise as well. But if you want something statistic, something a little bit easier, I think the CPI and the NFP numbers from the US are probably the two more volatile numbers that are statistically, arguable, I guess. All right. Okay, let's talk about gold. But if you guys have any questions, feel free. Gold, I might actually fade this at about 2,000. I'll be honest with you in terms of gold. The reason why I get out from that gold position when it comes to 2,000, I don't like where it is positioning right now, because I'll show it to you. We did bounce off the Ishimoku cloud, but we just did come off the Ishimoku cloud. So I'm actually going to hide the Ishimoku cloud because it causes a lot of confusion for new traders. But I'll use the pivot and take a look at where the resistance 3 is located. It's at 2003. For a price hitting resistance 3, it means it's at a little bit of an extreme. Okay. So yeah, if we got price moving from pivot to resistance 3, that's a significant move. Okay. So that's already, sure, it's only $20, but we are calculating the daily range, and we're taking a look at that daily range, and I think that's kind of a little bit too high from where we want. We might actually be starting to be looking at a little bit of a fade, but I don't want to fade gold because there's a lot of risk involved in shorting gold at this point in time. You guys know the current geopolitical conflict that's been ongoing right now, and that's a reason not to go short gold, because gold is considered a safe haven. I'll be looking for a little bit of a pullback, maybe buy in if it comes back a little bit lower, see if it's sustainable above 2,000. Then yeah, I might consider that, but I wouldn't consider it right now. That's why I got out of that gold position. So we just want to take, all right, we got the NFP pushes it in one direction, we got in, we got out, be done with it. Simple as that. Can you put a sell trade on the Euro USD? If it fails, it doesn't close above 1.07 on the early time frame, probably. But yeah, I'm not looking at any indication to go short in yet. You can't just say, oh, I want to go short right now because that could be a fade. No, for it to actually fade, you need to take a look. If there's a rejection, if there's any signs of market getting a little bit overextended, right? For example, on this one here on the early time frame, if the stochastics crosses down, right, something like that, you can use that and say, you know what, momentum might be wearing off. It might have become oversold. It's not going to be able to break above 1.07 because it's a strong psychological resistance. It's a very strong key level. Yeah, you can. Can you anticipate that? Sure. But if you want to go short the euro, for example, let me just hide the pivot so there's not too many lines. If you want to go short the euro, you can. It's just that if you go in short right now, where's your stop loss going to be? Because if you place it at 1.0725, market is just going to hit it, right? The minimum stop loss that you have right now is that it's going to be at 1.0750 if you want to short it. How far can you short it? You can only probably short it back to 1.0650. It's still going to give you more than 1-to-1 risk reward ratio. But if you wait, what the market is going to do is the market is going to do that, and then it's going to come back down. That's going to give you a little bit of a lower stop loss that you can use, right? It could be just there. It could just be there. It might not be at 1.0750. But at least if you see a little bit of a turnaround in the market, that's where you want to go short on the euro, okay? When we talk about the fade, it could happen in a long period of time. Take a look at this one here, right? This is on the 15-minute time frame. And for the fade to come back to that level, it actually takes 1 day. So there's no rush for this one. Okay, so this is on a 15-minute time frame. It does take time for it to kind of pull back. But you see what happened here? It kind of just slows down a little bit if there's actually going to be a fade, right? But the market right now, we're not looking at a fade as of yet, because if you go on to the 15-minute time frame, the market is still pushing up higher. But if this starts to fail on 15-minute time frame, for example, we're starting to see a shooting star, and let's say market then closes back below 1.07 on the 15-minute time frame, then that's probably where I want to go short. Maybe I'll have my stop loss just about there. Potential target, 1.0655, 65, 1.0660, 1.0650, right? That's going to give me a good risk reward ratio, but I need to wait, because if I don't wait, my stop loss is actually going to be about 50 pips. My risk reward ratio wouldn't be that great. So please wait. Okay. Same thing with the pound USD. So it's going to be the same thing with the pound USD. We're looking at a very similar level as well. We are looking at 1.23 on the pound USD. Okay, so I can go into the pound USD, take a look at where the 1.23 is. That's going to be your key resistance, because that's where the market was being capped in October. That's the reason why I don't want to overstay going long on the Euro USD and the pound USD, because the market could reverse tonight. I'm not saying within the next 15 minutes. Hopefully it does, because then it allows us to trade for today. But it might not close above those key levels tonight, and if that's going to be the case on Monday, it could actually fall significantly as well. Even though the data was bad for the US, the overall US economic data is actually still pretty good. A weakness in the labor market doesn't represent anything, because we just had a superb quarterly GDP numbers coming up from the US at 4.9%. Okay, so you guys need to take that into consideration as well. Okay, cool. All right. So this is the code again. If you guys want to use it, it's Nonfarm 2023. Our trades for tonight are pretty much done. What you guys want to wait for tonight is the potential to fade the trades that we just talked about. Okay. If you missed out and you want to review it, feel free, because this is recorded. You can come back and review it. I think you should have time in the next 30 minutes to review what's going on as well. Okay. Is there any possibility to reverse because the number was so bad? Yeah, it could. It doesn't matter. The number, it doesn't matter, because let me explain a little bit. In terms of the NFP number, the NFP number is just one simple piece of the puzzle, right? It's very bad. The employment sector, I would consider this to be a very bad number, but it's still not going to override the quarterly gains that we saw in the US, which is a growth from 2.1% to 4.9%, which is double the last quarter in terms of GDP growth. That's still a very solid number. And this is the statement from the FOMC as well. It's no longer strong. Was it solid? No, it's not solid. It's strong, right? That's basically the FOMC. All right, so the code again is Nonfarm 2023. You can use this to double your deposit bonus. If you are trading with Octa and you're thinking of depositing into your trading account, make sure you use this code, because I know there are going to be terms and conditions in terms of how you can withdraw it, but it will help out in terms of your margin requirement when you open up a position, and if it's required margin is going to cut into your equity balance, right? The code, the bonus that you're gonna get here is actually gonna help out with that. So I think it's still pretty useful. I mean, it's there. Might as well just use it, right? So the code is Nonfarm 2023. Okay, so I'll go through some Q&A, but it's one data. Fed don't use only one data, correct? So yeah, I would. It's irrelevant in terms of what the Fed wants to do right now, because the Fed is pretty much done for 2023. They didn't hike this week. Yesterday they didn't hike. I was actually pretty disappointed, because I was on the cam where I expect, come on FOMC, do one more hike, it's actually going to move the market and stuff like that. But they were a little bit more dovish. So yeah, the economic data in the US is actually really, really good, and it's very hard to argue with that. And I think the Fed not hiking interest rate, I think that was a great decision as well, because they didn't want to tighten it, turn it into a bad number. But yeah, quality growth superb from the US. So I'm not saying the market wouldn't reverse just because the data is bad. I'm actually a little bit more concerned because of where we are right now from a technical perspective. Now, remember, we're still looking at technical analysis. We still look at 1.23 on the pound USD. We still look at 1.07 on the euro USD. What if it fails tonight? If it spikes out and it comes back in again, it's all going to be very problematic as well, right? And the Dow Japanese yen, we still have 149. That's why I don't like shorting the Dow Japanese yen. That's the reason why I just kind of get out from the Dow Japanese yen. The Dow Japanese yen technically is still in a very strong uptrend. The pullback that we see here is still going to be well supported. We still got support 149, 148.50, 148. There's still going to be demand for the Dow Japanese yen. Okay. Can gold reach 2015? I don't know. If it surpasses 2000, we still have projected target for gold at 2032 at this point in time, but it really depends on the current conflict. If it's worse, then yeah, it could, right? The Dow Japanese yen, I actually wouldn't want to trade the Dow Japanese yen. As I said, I'm not too keen on shorting the Dow Japanese yen, but buying the Dow Japanese yen as well, it's probably not a good idea at this point in time on Friday. You might probably want to wait until Monday. All right, cool. So that's pretty much it for today. So what's next? We've got news trading theory and practice. We're going to take a look at the advantages and disadvantages of niche trading. Most profitable news for trading. There was a question about that just now. We're going to talk about this on the 9th of November. News trading and price action. We'll take a look at the buy stop and sell stop strategy that we just used, and when to use the buy limit and the sell limit strategy, which is another pending order that we can use. All right. So I'll see you guys on the 9th of November, which is going to be next Thursday. We are going to go through the second session for news trading, which is going to be the theory and practice. If you have any questions regarding tonight, maybe you want me to review it, we can come back on next week and then review it as well. But beyond that, we are actually going to be trading the live CPI numbers again, which is going to be on Tuesday, 14th of November. Okay. Which time frame do I look to sell to trade on the Euro USD? On the 50 minute time frame is the minimum if you want to trade it for today. If you want to wait out, the hourly time frame or the daily time frame, if you want to hold off from today, maybe you want to trade on Monday. 1 hour would be the time frame. But if you're looking to fade it in, 50 minutes is going to be the number. Okay, cool. Thank you all. Easy money session. Ulven always love it when it's so easy, right? We got in, we got out. Simple as that. No headaches. We'll just take it easy. But yeah, you got to keep your cool when you trade the news. You just can't panic. Just go with the flow. All right, cool. Have a great, fantastic weekend, everyone. Thanks for joining in, and I'll see you next week. Stay safe.